Hi, my name is Joseph Bassett with the Watson CPA Group, and today we're going to be talking about my favorite deduction, meals. Now, this also happens to be one of the IRS's least favorite deductions, and this is pretty evident in the Tax Cuts and Jobs Acts released in 2017 with the Section 274, which referred to meals and entertainment, and it looked like it was written in crayon, to put it nicely. Now, thankfully, the IRS released the Notice 2018-76 to kind of clarify things and say, hey, you can still deduct meals how you're used to, and hey, you can also read this one. So the meals are going to kind of fall into two buckets. You got the 50% deductible and the 100% deductible. And kind of the first requirement for the 50% deductible is your business meal has to have a clear business purpose. So it can't just be I'm going to see this guy and have a meal. It needs a clear business intent, and you want to keep track of that too. So keep a logbook of who you met with, what you talked about, and then also keep your receipts for the meal. You can also deduct the tips and the costs to get to that meal. So if you're taking an Uber to get to the business meeting where you're going to have a meal, that would be deductible. Now, you just want to be reasonable with that though. So, maybe don't take the Uber luxury, maybe just take the standard, and the tips need to be reasonable as well. So if you guys are going to IHOP for a short stack, don't tip $1,000. And then kind of the big thing with travel meals is you have to have substantial rest. And now, substantial rest is kind of tends to be a gray area for some people, but if I give you one example, so let's say you're driving up from Colorado Springs to Denver and you have a meal, and then you drive back to Colorado Springs, you drive down to Pueblo, you have a meal, you're a traveling salesman, you're driving all over Colorado Springs, you're driving around for 12 hours, and then at the end of the day you come home to your home in Colorado Springs. Those meals aren't going to be deductible. You have to eat anyway. So unless you have substantial rest, so you drive up from Colorado Springs to Denver and you spend the night in Denver, then that would be a deductible meal. But the substantial rest portion is huge because the IRS already doesn't like this deduction. So they're not going to let you deduct something that you would normally need to eat anyway. So that's kind of really the big thing for substantial rest. And the 50% buckets, got to have a business purpose, and you can include the costs of the tips and transportation if they're reasonable. The next bucket that we're going to kind of talk about is the 100% bucket. Now, the first one of these categories is, power lunches. So during tax season, when we're crunching the numbers, crunching out returns, sometimes we'll just order pizza so that we can eat and keep working, and we don't have to leave the office to go get something and stop working. And these are seen as employer convenience meals. So these are 100% deductible. And then the next portion of the 100% deductible meals is going to be for holiday parties and picnics. And these are typically not at the office. So maybe you have a company picnic every year after a successful tax season, and those meals would be 100%. And then speaking of tax season again, it's kind of a big theme around here. The 50% for promoting goodwill, that kind of relates to, after a long day of work, if we, go out to the bars, go out to restaurants, those expenses would be 50% deductible unless you own 10% or more of the business. Then unfortunately, you're on your own. But hey, you got to eat anyway, right? So next, we've got the de minimis meals. I know it gets hard to say sometimes. So this kind of hits on coffee, donuts, and the reason why we put copier there is just to kind of let you relate to it. If I go and use the 2 copies, is that really harming anything? Is that increasing my worth? No. So the IRS just kind of sees it as de minimis. So around the corner, we've got some granola bars, some crackers for boosting our blood sugar when we've been working all day, and that's just not really boosting anyone's value. So we get to deduct 100% of that. And then I know what you're thinking. Wow, all these meals, all I need is a business purpose and to be reasonable and some substantial rest. I'll tell you what, Joey, I'm going to deduct every meal I eat. Unfortunately, if you do that, you're probably going to get a rule named after you, much like Richard Sutter, who was extremely ambitious and aggressive with his meal deductions. The guy tried to deduct every lunch he had every day, and at that point, when you aren't reasonable with the IRS, they're not going to be reasonable with you. So the Sutter rule actually allows the IRS to disallow a portion of your expenses if they make up a large amount of your regular living expenses. So don't get greedy with the meals. And then something else to not try to game the system with is don't try to disguise entertainment in there. So, entertainment is gone. I'm sad about it. You're sad about it. I would love to go to a Rockies game and have a consultation, but I can't do it. So unfortunately, the IRS isn't going to buy that, oh, this $500 hot dog seems like a legitimate business deduction. So don't try to disguise the cost of entertainment into your business meals, because at the end of the day, it's just not going to be reasonable. If you do happen to go to a Rockies game, though, and you get a hot dog for, let's say, $10, something a little more reasonable than $500, then that $10 hot dog would be a deductible business expense. But at the end of the day, if you're not sure about any of these, just give us a call and we can help you out. And you can also visit the links below. Thank you.